Hi, and welcome to our refreshed To The Point video series. This segment in the series will focus on informing and educating our community about the industry we call real estate. Our goal for this To The Point video segment is to dispel myths, provide clarity, and create quality resources to help us all be successful. So let's get to the point about the lending approval process with my special guest, Andy McInnes of Umpqua Bank. Andy is a longtime affiliate member of our association, but more importantly, he's an expert in his field. Good day, Andy, and thank you for being our very first guest.
Gary, thanks for having me. I'm glad to be here.
Andy, we've got markets. You and I have been at this for a while. How long have you been doing mortgage lending?
20 years in lending.
20 years in lending, my goodness. And this market is really, really crazy. We've talked and beat the horse to death about a shortage of inventory and escalating prices and everything else. When I am ready to take someone out to show them a house, I want to make sure that they are capable of buying, especially if they're going to get a mortgage loan. Tell us about your process and how you go about qualifying somebody and why it's important to both the borrower and their opportunity to get a home.
Absolutely. So when a borrower calls me and is a referral or comes to me and asks what they can qualify for, whether it's over the phone, in person, or what we do is take a set of, a questionnaire and ask them what they do, what the income is, look at the credit, find out all the things that they have in their situation and what they want to accomplish, and you take it from start to finish. So what I like to do is find somebody that hasn't found a house yet, obviously, that wants to know before they go looking for a house what they can afford. So then they bring in all the documentation that would be required to get them credit approved. So what we do is, whether it's pay stubs or W-2s, tax returns, all the items that would be required. And oftentimes nowadays it's electronic, so you can bypass a lot of items in regards to collecting that. But we get it, we take it, we send it up to the underwriter and have it reviewed before the borrower goes to look for a house, so that you, the realtor, and the borrower has the confidence to know, go get a house. This is good. There's times when you have individuals that are just W-2 salaried, and I can look at the pay stubs and I can say, hey, I can look at this and I see the income and the assets in the bank, and I can say, go get a house. I mean, I can determine that, but I don't have the official rubber stamp. But oftentimes there's borrowers that are self-employed, may have multiple entities. And with COVID, now you have to get profit and loss statements. You have to get bank statements for the business to show that there's activity. So in a lot of sense, some of these folks that have more complex tax returns, I can't just look at it and say, you can go ahead and go buy a house. And for sure, I'm very clear with my realtors that I work with. If I tell them, go put them in the car, you can put them in the car, or you can show them houses, you can show them houses. If I say don't put them in the car, don't put them in the car.
That's great. So with the rise in pricing, we have seen a lot of opportunity for people to get themselves priced out of the market, but at the same time, interest rates, mortgage rates have gone down. Now that might be changing. What's happening on the interest rate front right now?
The volatility of the rates is something that over the last 30 days has been significant in a change of where pricing is and where it was. Probably a month ago, I'm just on a purchase, I could say I was probably quoting on a 30-year fix 2.75, and I think today I was looking at 3.25. Or 3.25. So anytime that the rates change a 0.5% in 30 days, that's significant. Now, in the grand scheme of things, okay, 3.25, we all know that that's still pretty cheap money. But if that continued, the volatility continues to occur, you're going to see a major shift in the market based on what's going on out there.
Okay, so talk to us about if the rates go up 0.5 point, what does that mean to the borrower? How much less home can they afford?
Well, It depends on the loan size, but I mean, a half a point could be significant. It could be $100, $200 or something, depending on what type of, what type of program that they're wanting and what they're looking at. So yeah, no, it changes what's going on in their life situation. They're going to look down and say, that's not where I want to be. So either they're going to shift to either a lower home, maybe shift to a 30-year instead of a 20 or 15 or something like that.
Okay. So with COVID-19, have you taken precautions? I know people used to go into the bank and everything else. Are you doing more online and phone call and video where you're doing your qualifying process where people can get to meet you, but maybe not necessarily in person?
That's correct, yeah. More often than not, the applications at this point in time are being taken by telephone. It's rare that I have somebody, but there are those, and I do have clients that say that they want to sit down and meet with me. If we'll sit down and we have a conference room where there's distancing between us, but I don't normally do the Zoom meetings myself. It's just I prefer to, but when I do take the applications, I take them personally. I take them either over the phone or with somebody that's gonna be there. I want to understand the file, so maybe you have a lot of loan officers that allow the clients to do them online. I don't favor that.
Okay, so Andy, where do you think this lending is headed? We dealt with it a little bit earlier. Do you see rates stabilizing? Do you see rates being a little bit up and down this year? And if you were looking at a borrower in the eye, what would you tell them? You'd say, get busy and get it done?
I would always tell somebody to be prepared. If they are thinking of buying a home, then get credit approved. Go to a lender, find the lender that you want to work with, get the file underwritten, and be prepared. I wouldn't say that I'm the type of person that's going to try to tell you that the rates are going to go up or down. It's volatile right now, so the lenders are very hesitant lenders don't like volatility. So when the rates and the pricing swings like that on a daily basis, it's hard to price. And so the lenders, there's a lot more risk out there for the lenders on pricing. And so they like it much better when it's calm seas and in regards to that. At this point in time, what you've seen over the last 30 days has been a significant increase. And if, there's plenty of articles that would imply that might keep going, but you have probably just as many people on the fence that say it's going to be short-lived and what have you. But, if they continue to go where they're going, I think you're going to see a softening in the, a little more inventory and a little more, maybe a little back to normalcy.
Well, normal has been a lack of normal for the past 5 years in our business, that's for sure. So Andy, thank you for helping us dispel myths and provide clarity in the lending process.
Gary, thanks for the opportunity. It's been an honor to be here today.
Join us next month as we talk with another great community partner to help you and your clients have a successful real estate transaction. You will have to tune in To The Point video next month to meet our special guest. To watch our new To The Point videos, subscribe to YouTube channel at RSAR Realtors or visit our website, rsar.realtor, to catch up on missed episodes. Thanks again for joining us. I am Gary MacDonald, your host, and proud to be your 2021 Reno Sparks Association of Realtor President.